right, everybody, welcome back. What are we doing today? Monday.
What did we do this weekend?
We did the MFIN conference.
Multifamily Investor Network.
600 people in Houston.
Packed house, sold out, 200 people on the wait list. It's definitely a good time. It was a long 3 days, to say the least.
72 hours getting shot out of a cannon, folks. But
we're just a little tired.
Yeah, we're back. It's Mondays, 3:30-ish, and we always want to be here.
And like we tell people, consistency is key. And even though we had everything, we're still here doing this. Whenever Ben really was just saying he wanted to go home, take a nap.
Don't put that on me.
Didn't want to come back, but I'm here for you guys, so don't worry. I'm here for you all.
I love doing Monday Mondays. And like Ferris said, me, him, or both of us will be here every Monday at 3:30. So what are we talking about today, man?
We're just basically doing a lot of Q&A that people came in from the conference. I mean, during the conference, a lot of questions, a lot of things people wanted to know and understand, and we are here to kind of help go through those and answer them.
I think these were some great questions, and so we kind of compiled them together, and ultimately we wanted this to be interactive, folks. So if there's some questions, you're tuning in live, drop your comments, drop your questions in there. Ferris or Shanna will pick those up and we'll go through those as well. But essentially we're talking everything multifamily real estate investing, but it could be anything else too. We can talk about single family, we can talk about the economy, we can talk about tech, partnerships, raising money, whatever it might be. Right? So these just happen to be some of the ones that we felt were fairly good questions that came in from the conference, and we're going to kind of go through these right now. So this is in third person. So Ben mentioned relationships were with brokers at MFIN. Would you speak to your duty and efforts to maintain and develop relationships with your investors? So I think this is a question like, hey, we spend a lot of effort developing those relationships with the brokers.
Yeah.
How do we maintain and develop those relationships with investors?
Yeah, and I think, it's really not as hard as it may seem, right? Investors are your customer, right? Brokers are the source of your business, right? They're kind of your supplier, but your customer is the investor. So add value to your investors, right? Be available, answer questions, help figure out ways to be front and center, right?
Yep.
And I think that's the thing, for us. We do a newsletter, for example, right? We do events to have investors come out and meet us, from our monthly meetup to our quarterly,
I'd even say the property tour.
Yeah, property tour that we did yesterday. So,
so then that's actually a great point, right? You got to be open, you got to be transparent, and ultimately, the message that we're trying to get across to people this weekend was networking is key, and being open and transparent and adding value to people is huge these days, right? That's why we're on here. We're giving away content. It's because we're trying to provide value to people, and that attracts people to you, right? Because that is an open, honest, and candid way of doing business. So I would say the best way to develop those relationships is get out and network. You got to meet people face to face. You can't do it all online anymore. COVID, yes, we still have some hiccups from it, but it's for the most part in the past. There's a lot of events that are in person these days, including ones that we put on. So come out, pass out some business cards, ask questions, develop those relationships. Even if you're going to be purely passive, you still need to meet people, folks. It's important. You need to have those conversations. You need to vet those folks. In fact, there was a couple of investors that came in Friday before the event that were just here for the event that wanted to stop by, see the office, ask us questions, just see what our operation was all about, right? And they were so blown away that, hey, you guys, ultimately have a real operation. You guys were, willing to spend some time with me even on a Friday. Yeah. And we say, hey, that's just what we are, right? We want people to feel like, hey, good, bad, or ugly, you can approach us and you can ask questions. Yep. And I think people gravitate to that. So, again, it's not secret sauce.
No.
This is all stuff that's just tried and true, and developing a business and, cultivating, customers, which in this case is investors. Yep. So
let's keep going. Lots of questions to get through.
Have you ever backed out of a multifamily deal, and why? Ooh. The only deal that we got under contract and did not close, we got under contract middle of March 2020. So for anybody that remembers what happened at the end of March of 2020, they had this whole little thing of 15 days to crush the curve or flatten the curve or whatever, and they completely shut down the economy. Well, that's just not really conducive to doing any real estate transactions. So we ultimately had to back out of that, and we worked it through with the seller. But that was the only deal that we ever got under contract that we did not close, because we do a fair amount of due diligence up front. And we know going into the contract that we're, for the most part, going to close it. And then once we do due diligence and we walk off that property after those 2 or 3 days of walking units and shopping comps, we know 99%, actually 99.9%, that we're going to close that or we're going to back out of the deal. Right? Yep. One of the two things is going to happen after that.
Yeah, and on that deal, the seller wanted to keep the deal, refi, and hold on to it. So
it was a win-win in the end. Don't get me wrong. It was frustrating. It was tough. We had put a lot of money into the deal. We lost money. Obviously, there's hard costs that go into doing due diligence, especially out of Houston. Right? We had to go down there and do all that. So that was the only one that we ever backed out of. And I don't want to ever have to do it again, because again, we do a lot of due diligence up front to make sure that we don't get into deals that are bad. So, moving right along here, what is the best way a real estate investor can get in good graces with a real estate broker in order to obtain pocket listings before you put it on the MLS? Well, there's a lot of crazy stuff that went into that question. First of all, we do not shop our types of deals on the MLS. There are smaller multifamily deals that you might see on that. There's really not anything called a pocket listing anymore. Everything, even if it's off market, trust me, there's multiple brokers that are working that deal, and there's multiple buyers groups that are also getting access to that. So, but I'm going to let this guy's the guru when it comes to developing.
Like Ben said, everything goes through a broker, right? You want to be the first guy that they call. And sometimes you have 3, 4 different brokers that'll call you immediately on the same deal, right?
Yeah.
So it happens. And
it might have happened this morning.
Yeah. So you want to be the first person that gets told about deals, and that's how you can go fish and, basically go swim in a non-red ocean, right? A little bit less red.
Yeah.
And so how do you do that, right? Brokers, it's like any friendship, right? You gotta meet with people, grab lunch, catch up, get to know them, get to know what they're doing, what their kids are, what they enjoy, right? And figure out ways to stand out, right? I mean, don't be just the bump on the log that only calls about a deal and disappears and you don't ever hear from, right? Think of ways to be creative. That's constantly something that we strive for and we think about, right? From, our conference is a way to be creative. We put guys on stage, we send them things at gifts afterwards, right? To other things that you might think about, like, hey, they mentioned that they really like hunting, and maybe you drove by a piece of land with hunting, you take a picture just to start a conversation, right? I've done that where something in a conversation came up and I just snap a picture and send it to the person just to talk about something that's not apartments, right? It takes time and effort, and brokers are people too. They're good guys. They're fun guys to hang out with, and they also love
there is women in the business,
and they also love real estate as much as you do, right? So it's kind of a win-win. They're good friends to have, right? Because you can kind of relate to them versus like the high school friends that you don't really ever see, that you don't really have as many ways to relate to anymore. So,
agreed. So again, you have to have a real relationship with these, and I actually talked about this at the conference this weekend. A lot of people, they get intimidated maybe, or they're nervous that maybe the broker will see them as being a newbie and they're not going to take them seriously. So what they'll do is like, what's the whisper? They'll ask, the very basic questions just to get the information that they don't have, that they can plug into their spreadsheet. And that's all they do, right? You need to go above and beyond that to really be able to show people, hey, we're a legit firm or we're a legit buyer and we can close this transaction. Because ultimately, the reason that these people are so guarded, the brokers that is because they don't want to get burned, right? They don't want to say yes to you and then you don't close the deal. Or you close it maybe, but you're the biggest pain in the butt for them and the seller. Right? And they never want to do business with you. And both of those things happen a lot, trust me. And so you also, once you've built that rapport, don't burn it by being a bad buyer either. You want to be that person that people want to do business with, right? But yeah, I think that's important. You got to build that rapport, like any other customer or potential customer, and maintain it, right?
Yep.
So, all right, moving along. To disrupt equity, what type of multifamily developments are you looking for and which markets? Are you buying land fully permitted or do you plan on entitling?
Not sure the question I was going to ask you earlier, but I'll ask you offline. The answer is we want to get into, for new development, right, to begin with, we want to get into projects that are pretty much ready to go.
Shovel
right?
ready.
Like the step right before, like essentially the site is ready, most things are figured out, and it's really about putting together the debt, the equity, and picking the GC and rock and rolling, right?
I think that's shovel ready.
Fair enough, but I guess, but I think the problem is people think shovel ready like it's ready, but like it's
not necessarily ready like where you really can get a shovel out there, but like just to the point where what Ferris is saying is like it's already entitled. It can do multifamily or whatever you're wanting to build on it. You don't have to go through all that process, right? Yeah. But what types of multifamily developments? That's the ones. We would love to do some in Texas. We're already looking at some here in Houston. Preferably it's something in our backyard, not necessarily because we're scared of doing out-of-state deals, because we do those all the time. It's just more so we can learn and we can put our hard hats on and actually go out and see it being built, right? So that's kind of the answer to that question. In your opinion, what's the biggest risk considering when analyzing deals for 2022 and beyond? Okay, this is a fair question, right? I'll let Ferris answer, and then I probably got a different answer.
I'd say the biggest risk right now is a good. Let's see, what is the biggest risk?
I put you on the spot, man. I put you on the spot.
Just typing. I think the biggest on a deal right now, the biggest risk is getting stuck with a deep value add deal, right? That ultimately you're overpaying, right? Cap rates are super tight, and if I'm going to get stuck, I'd rather get stuck with something a little bit cleaner, nicer. That's maybe a risk. I'd say the other risk is just, even though you hedge for it, there's still just short-term versus long-term debt risk, right? And so, if markets take a dip, being stuck, and is it a rate that you're comfortable at, and can you refi into that in year 3, right, where you want to be? I'd say those are my 2 biggest concerns.
Yeah, and that's probably going to be mine. I think
you just didn't want to have to think about it. You just stole my answer.
No. Well, I was going to talk about interest rates, which it's kind of related to the debt, exactly. Right? And we talked about this this weekend on. I was lucky enough to be on the financing panel, and to kind of put a spin as a sponsor, right? And I think the consensus is nobody knows where interest rates are going to go, right? Everybody thinks they're going to trickle up. But how quickly and how far, nobody really knows, because if they jack them up too fast, they could implode the economy, right? The other thing that I also like to tell people is that we get caught up on the 10-year Treasury, which you should be keeping up with, and I think right now it's hovering around 2. But all the bridge debt that you're getting is based off of LIBOR or SOFR, right? So those are totally different metrics. So you need to be looking those up too, right? And I think both of those are fairly low, and then on top, then your lender's going to put a spread on top of that, right? That's why your bridge debt is almost as cheap, if not cheaper, than what you're going to get from Fannie or Freddie, because Fannie or Freddie is based on the 10-year, right? So they're going to take that 2%, then they're going to put their spread, which is typically anywhere from 250 to 450 on top of that. Then that's your all-in rate, right? So 2 plus, let's just call it 300. Your interest rate is now 5, right? Versus the SOFR, I think, was at 0.05 or something around that, and then they're putting another spread on top of that and call it another 350. So now your all-in rate is 3.55. So bridge debt is actually cheaper right now.
I'm gonna put Ben on the spot. What does SOFR stand for?
I have no idea, and I'm not even going to try to answer that question.
Secured overnight financing rate.
All right, well, there you go.
I actually knew that, but I forgot it, and I just looked it up again. So.
Oh, he knew it though, folks.
I did know it.
He did know it. No, so I think to Ferris's point though, that's probably my biggest concern right now is where's that going to go and what is that going to do to affect the debt market that we're in? Because I'm going to tell you folks, bridge debt 3 to 5 years ago when me and him partnered up was like, you do that when you had a hairy deal. Everything else was Fannie and Freddie, and now it's completely flipped on its side. Everybody's doing bridge. 9.9 times out of 10, that's what people are doing. And what people are not realizing is that in 3 to 5 years, when all these things come to mature, where are rates going to be? Because your rate will determine your loan proceeds too. And can you get out of those deals? So we're always cautionary when we see people that are kind of really pushing the needle in terms of leverage. Just be careful. Do you have enough room to potentially, still get out of the deal without having to put money into it on a refinance? So that's our biggest concerns, right? Or I would say maybe the biggest risk right now is that there's a lot of uncertainty in the market, right? But doesn't necessarily mean, so take that out versus the economy, right? So the economy in some cases is still doing very, very well, but the interest rates and how that affects markets is also something that you have to take into consideration. So last question, and I want you guys to drop yours in here if you want us to talk about them. So for passive investors, is it beneficial to create an LLC to invest with and to collect the distributions? And I'm going to answer this. Everybody's situation is unique.
Answer it the lazy way.
I know. So I'm going to put my legal hat on, right? I mean, you need to obviously consult your own financial CPA, legal teams. I would say that you have limited benefit, right? Unless you're flying out to the property and you can deduct those expenses and some other things that are good when you have an LLC, then maybe you do it that way. But I don't know. What's your thoughts on it, man?
Yeah, so I mean, I don't, again, investors are protected just by the structure of the asset and the kind of the entity.
Yep.
There's really not a lot of reasons. Now, if you're doing, if you're doing 1, 2, 3 deals, probably not. If you have 40 deals, absolutely, right? That becomes a business in itself.
Yeah, it's a business.
So,
yeah, and I guess that's a good point. So to what Ferris is saying, right? It's a limited partner, right? So that means that you're limited to the amount of money that you've put into the deal. So you put $100,000 into that project. If that thing goes completely belly up, the GPs completely muck it up, maybe they even committed fraud, maybe they did everything that they could possibly do go wrong on that deal, you're only going to be on the hook for that 100K. Yes, you'll lose it all, but they're not going to come after you personally, right? That's how these things are structured, right? And so, in that case, from an asset protection standpoint, probably not. There might be limited tax benefits to doing that, but again, check with your CPA, check with your legal teams. That's how I'm going to answer that question. So, I got through that. Any questions online that we can kind of go through?
I'm looking actually right now. So I feel like there's a question that came through on Instagram.
All right, keep them coming, folks. We can talk anything.
What's the question?
It's from Eric Upchurch. Hey Ben, I heard philanthropy is a big part of why you buy multifamily. Aren't you raising money for an amazing veteran?
I am, and actually that's a great question. So thank you, Eric, for putting that out there, man. I am raising money for veterans, homeless veterans, and me and Eric are out there trying to create awareness for the situation that's really, I would say, epidemic in this country, right? So next week I'll put the URL out there so you guys can go and contribute to this cause. I am matching dollar for dollar everything that anybody invests in. I'm going to stroke a check at the end of the day and match it as well. So thank you, Eric. And dump it into the comments, man. If you do have it, right? What the URL is. Love to do it, but we'll put it on next week's show and make sure that everybody knows about it.
We also got another one. Someone said, buy now or wait for the market crash later this year.
I think everybody, they've been saying that. So I got into multifamily in 2014. They said that was the top of the market, right? And I think every year since then they've been talking about it. At the end of the day, the best time to buy real estate is yesterday. The second best time is today, right? At the end of the day, there's always going to be opportunities regardless of where you're at in the market cycle. And if you try to time it, then you're
always structuring your deal correctly.
Yeah.
It's like the stock market too. You don't want to time the market, right? You just should cost average and continue to buy.
Yeah.
Right. Same thing with real estate. Structure your deal accordingly. Have your mitigations in place. Don't go too leveraged, too extreme, right?
Yep.
But have a plan. So.
I think it's important that people realize that you have to stay in the market and keep your ear to the ground. Don't just wait until you hear something on CNN Money or something like that. Oh, the market's crashing. Because really, what people in the news media really equate to the market crashing is the equity market or the stocks are crashing, right? You need to understand that is one small piece of our overall economy. And even back in 8, 9, and 10, it was important to kind of make a distinction between the different markets. Some just got crushed, like Florida and Vegas and some other, California. But Texas was humming along, man. Yeah. 8, 9, and 10 was actually a great time for us. So it's definitely more regionalized, if not localized. And you need to understand that, hey, maybe the real estate, market in these cities is doing horrible, but there's other ones that are probably doing pretty good. So don't wait for that market crash. My whole point is that you should get into the market. You should definitely just mitigate your risk and make offers.
All right, we got another question. In this environment, what is the highest LTV an operator should go up before deals get risky?
So we talked about this earlier.
As low as you can comfortably go is the answer.
Yes,
right.
I would
Most
say
of our deals we're not doing 80. Some people do 85. We're doing like 70, 75 is preference on our deals,
yes,
right?
tops, right?
That's on the tops.
There's no reason for us, just for various reasons, we don't need to do that, right? I think in a lot of ways people try to take as much debt as they possibly can and then try to stack some other stuff on top of it, just because it's hard for them to raise the money, right? For us, that's not necessarily a challenge anymore. So we would much rather protect our investors and ourselves by taking a lower leverage loan, and that also gives us more likelihood of success on a refinance that's going to be strong too, right? And so, because you got to realize, if you come in and you're 85% leverage, it's going to be harder for you to pull that money out on a refinance in 2 to 3 years too, because that means you just have to push the needle on the value just that much more. So, what is everybody's comfort level with that? Who knows? We're in the 70-75% range.
Cool.
Is that what we got?
Let's
Is that
keep
it?
going.
All right. Well, let's keep going then.
We did get a comment. Just some feedback for you guys. Vlad said, "Hey guys, after this weekend's event, I'm a huge fan and loved learning, networking, and appreciate all you do."
Thanks, Vlad. And hey, I got your message. Hit me up. Ben at disruptequity.com if anybody ever wants to talk shop. I love this stuff. But we're talking about our next event. I can't even believe it.
So Vlad's comment was about how awesome the event was, and it was. A lot of people said pretty much one of the top, if not the top.
And I wanted to give a shout out to Shanna Spree here, head of marketing. She doesn't. Oh,
you're right.
Okay.
Yeah.
She got married 6 months ago. That's my bad. Griffin. But we call her Shanna here. I don't necessarily ever call her by her last name. But point being is she did a great job. 600 plus people, a lot of great feedback.
Sold
it was
out,
positive,
200
sold
people
out.
wait list, so
so we're
next
doing
one's
another
coming
one.
up when, Ben? What's the date? We don't
Well,
know.
it was supposed to be June 18th.
This
but then
summer. We're going to nail the
realized-
date this week, and we will figure it out. So
Yeah, we realized that was Father's Day, which was the next Sunday. So we're not going to do it June 18th. But we are going to do it this summer, maybe July, August. We'll find out, right? And we're hoping maybe Denver, right?
Yeah.
So we're still trying to nail that down. But check it out, mfinvestornetwork.com/MFIN Summer 2022. Right? Pre-registration sale, $200 off. This is going to be the lowest price. That is the only sales pitch that I ever do on this show. That is going to be the lowest price. And promo runs until February 1st. Excuse me. So check it out. And we look forward to hopefully seeing you in Denver.
All right.
All right. So next, raising private capital with self-directed IRAs. Oh my gosh. That's what we're talking about at our next meetup.
Talk about it in person in our Houston meetup, March 3rd. Disruptequity.com/HTX meetup. Check it out.
Yeah.
Go get registered. We'd love to see you guys in person. Come hang out with us.
Yeah, so that's going to be March 3rd, 7 p.m. We usually have 150 people out there. We do that with the Invested Agents and Sandmore Investments. Great guys, great firms. We partner with them. Look forward to talking about that then. So, what are we talking about next week, man?
Biggest mistakes of our real estate investing career.
Oh my gosh.
For those of you that watch the show, you know it's picking the right partner is my biggest mistake. Perfect layup.
That was pretty good, though.
No.
All right, so we're talking about that next week. Thank you, everybody. Have a great week, and we'll see you then.
Thank you.